Every stock we cover on this channel goes through the same process, a full automated analysis that scores the business across several factors and finalizes to a composite verdict. The goal is simple: cut through the noise and figure out if a stock is worth your money, worth watching, or worth avoiding altogether. No hype, no guessing, just the data, the levels, and a clear take. Our system just gave this stock a perfect 10 out of 10 for growth and a strong sell signal at the same time. Yeah, you heard that right. Let me explain why both are true and why this one is actually setting up an interesting trade. INV Innventure gets a watch rating today at 48% confidence. Here's the two-sentence thesis. This is a high-risk, early-stage technology company with explosive growth on paper and a constructive market structure, but the underlying economics are still deeply broken. Negative gross margins, massive cash burn, and a near-term model pointing lower before any real opportunity sets up. The trade we're watching is a pullback toward $5 as a potential re-entry point, not the current price. So here's the tension in this chart. Market structure scores 6.7 out of 10. That's actually constructive. Price is being keeps returning to these levels, with the price action reading bullish on the medium-term time frame and the short-term support sitting right around $6.20. At $6.49, we're only 1.6% above that support, meaning price is tight and balanced lately, but the 60-day forecast, strong sell with 90% confidence. It's pointing toward $5.01 to $5.46 over the next 2 months. Here's how we're framing it. We're discounting that sell signal as a pullback opportunity. If price pulls back toward the $5 area, which lines up with the short-term lower boundary at $4.90 and a key support cluster, that's where the setup gets interesting. That's the level we're watching, not chasing the stock up here. Innventure acquires and scales what they call transformative sustainable technology solutions. Very early stage. Here's what the numbers actually show right now. Revenue, just $822,000 in the latest quarter. Losses, $44 million. EBITDA, negative. Gross margin is negative 630%, meaning for every dollar they bring in, they're spending more than $7 in costs. That's not a typo. But here's what's interesting. Revenue is growing over 80% year over year. Growth is a perfect score in our system, and gross margin is actually improving, up over 11 points from the prior period. The direction is right. The destination is just still very far away. Balance sheet gives some runway, $60 million in cash against $33 million in debt, and a debt to equity of just 0.16. That's actually clean for a company this early. The problem is the forward cash burn projection sits around $160 million over the next 12 months, so that cushion could disappear fast without new financing. For INV to become a real buy, here's the short checklist. Gross margin has to move out of deeply negative territory. This is the single most important metric to track. Operating losses need to start narrowing quarter over quarter. Free cash flow needs to show a clear improvement trend so the company isn't constantly diluting shareholders. Revenue quality needs to improve. Right now, collections are slow, with days sales outstanding over 120 days, meaning growth on paper isn't hitting the bank account fast enough, and price needs to hold above $4.90. If it breaks that level, the near-term structure breaks with it. There's also a risk worth flagging: $484 million of goodwill and intangibles sitting on the balance sheet against $599 million in total assets. If any of those technology licenses or acquisitions don't pan out, impairment charges could hit hard. Bottom line, INV is a watch list name with a very specific setup. Don't chase it at $6.49. Let the 60-day model do its work, and if price pulls back into the $4.90 to $5 range, that's when you reassess with tight risk. Bull case long-term sits at $15.30 if the technology thesis proves out, but that's conditional on a fundamental turnaround that hasn't happened yet. Composite score is positive, barely constructive. Growth score is elite. Everything else still needs work. Like and subscribe. Every stock we cover goes through the same full scoring system. No hype, just data and levels. See you in the next one.